Hey guys, thanks for joining us today. This is my weekly market update and doing this a little bit different this week. I have Nick Yeargin from Supreme Lending here with us, and he's going to offer some advice and expertise from the mortgage industry. Nick, tell us a little bit about yourself.
Hi, Tyler. Thanks for having me on. I'm doing well. I'm Nick Yeargin. I'm with Supreme Lending. I'm our Georgia, Atlanta production manager. We wear a lot of hats here. Sometimes rather than on the business card writing each title, we write WIT, whatever it takes.
Right.
If that means getting on the phone with a customer, helping one of our loan officers, or training our young people that we've pulled into the business, really just anything that I can do to help people buy houses here in Atlanta. My responsibility is for our loan officer population here at Supreme.
Awesome. How long have you been in the business?
In the business for almost about 20 years now. I graduated from the University of Georgia, and I said I'll never go into real estate. My family grew up around real estate, and I ran into an amazing man, the guy I work for today, a guy named Pat Flood, and he is CEO of an organization that's really special. And so I started out as a processor, had a little experience underwriting, and eventually got to the role that I really wanted to be in, which was helping people make great decisions, get good advice on the financing of their homes. And now I get the pleasure to interact with people like you and train a lot of other great new LOs in the business.
Awesome. Thanks, man. Well, yeah, thanks for joining me today. Thanks for being here to offer some advice in this market, because it's kind of obviously a scary time for a lot of people right now. But, we're trying to stay positive. And one of the things that I look at every week are just the stats on what's selling, what's going under contract. And I just looked those numbers up this morning, and we actually had 1,552 homes that went under contract in the past week. And actually the week before that was about 1,536. So those 2 weeks are just about the same. And then I compared that to the first week of March, so before we went into this shutdown. And then that first week in March, we had right at 2,000 go under contract. That's pending sales. That's for the entire MLS in Georgia. So we have seen some decrease, but the good news is homes are still selling. And so that's what I wanted to talk to you about a little bit is, if you can offer some advice on what this market looks like and how it's different from what you experienced when you went through it in 2008 as a loan officer.
That's a really, really great question. I'm glad you asked it, because I think a lot of people, especially someone who wasn't in a business related to the financial markets or even real estate back at that time, or they just were, maybe they were 15 years old then. I mean, think about that for a little bit. That was
Right.
a lot longer ago than
Yeah, for sure.
10 years ago. So the short answer is there's nothing in common with the event in 07, 08, 09, the financial crisis, and what's happening today, other than the fact that it is a financial event, a financial kind of meltdown, if you will, right? So when I say there's nothing in common, I may sound a little curious. There's nothing in common because that event was driven by a disaster in the banking sector. So banks today are extraordinarily strong, very well capitalized. We've all, as an industry, been making really good loans for the last several years. So the days of, like in the movie The Big Short, with the school teacher and 5 investment properties and no doc loans, it just simply isn't what's driving the issue here. So the biggest difference is this is a medical event, right? Which is what we hope to be short term. Gosh, we want people to be healthy. It's the most important thing, right? But that's really what's driving this, is compared to last time, it was a banking event. And so now you're looking at a scenario that as the medical event really gets resolved, and it will at some point, we just want it to be as short as possible. People can slowly, get back to work. And so the economy was extraordinarily healthy prior to the events that are taking place right now. Very, very healthy. There were no signs of weakness or anything like that. The housing market was doing incredibly well. Unemployment was super low. And what you find drives housing really are 3 different things. It's demographics, right? And household formation, I'll kind of put that alongside that. And it's unemployment and interest rates. So think about this for a little bit. So demographics, people forming households, wanting to buy houses, biology's kicked in, right? All the millennials are having babies, getting married. They're not on their parents' couch anymore, right? They're pushing 40. I'm in that crowd, which is great. So they're buying homes. Interest rates are lower than they've ever been. So really the only other thing that affects housing is employment, right? And we've seen more jobs lost, or about the same number of jobs lost in the last few weeks as were created in the rebound from the last financial meltdown. So if I look at this from a buyer standpoint, I would actually be really excited knowing if I feel comfortable with my job long-term, meaning I don't think that I'm going to be laid off in the next couple of weeks, or I feel like I'm still going to be employed, which is the overwhelming majority of Americans, actually, really. I mean, you and I are still here working, and it's terrible for, a restaurant worker, but, we believe even those people at some point very quickly, hopefully, would get kind of brought back into the employment sector. But if I was employed right now or feeling good about employment, I would absolutely feel very comfortable about what's going on in the housing market otherwise.
Okay, awesome. So that being said, and I think you kind of started to answer that a little bit there. My next question, that is, what would you say to a buyer in today's market? What does a buyer who's out there in today's market need to know about, mortgages and getting financed?
Sure. So first of all, like I mentioned earlier, it's cheap right now to finance a home. So what you're able to purchase, assuming the price is the same today, even as it was 90 days ago, it's much cheaper for you to own that property, especially spread out over a number of years. The average homeowner, if they're staying in a home 5, 6, 7 years, you're going to save thousands just from the pressure down on interest rates. So that's a really, really healthy thing. Like I said, if you feel comfortable with your employment scenario, you're really one of the best positions right now. You got a window of opportunity, right? As you know, the top agent, I know you guys are struggling with the inventory scenario in Atlanta right now. I'm assuming it's tough to find people that right home that they want, and that hasn't really changed because people aren't listing their homes. And you might want to, you might have something to teach me on this, but I don't see the inventory scenario getting any better right now.
That's totally true. Yeah, a lot less homes listing right now because people don't want folks in their house, really.
Right. Yeah, but if someone is, and this is a kind of psychological thing, but you may have as a buyer a really cool short-term window right now where someone who does have their home still listed and they're allowing people to come in their home and look at it and hoping they get an offer. You got a pretty cool window right now where you can probably get into the house. You've got super low financing costs and the ability to still obtain the home that you really want. I mean, ultimately, homeownership is a long-term decision, right? Like
Sure.
People aren't day trading their homes. So I may or may not buy Apple stock or Amazon stock today or tomorrow, depending on what's going on in the financial markets. Housing for your primary residence in particular, I would be all over buying a house right now if I felt comfortable with my employment.
Gotcha. Okay. And then, with everything, and I mentioned this last week, and you and I talked about it with all the forbearances and what's going on that side of things with lenders and servicers. What advice would you give to a seller in today's market?
Yeah, I would say to a seller, what a unique time, right? So you're not having to materially discount your home. When you look at the last financial crisis, if you will, it was a constant meltdown of prices for homes. I mean, you were trying to kind of fight each other to the bottom on your home prices when you're trying to sell a home. So it's very tough. Now, back to the inventory conversation I said earlier, really in a still pretty good position. You're able to hold a little firmer on your price, so that's good. One of the things that I would be extraordinarily careful with is who I accept an offer from, right? So if they're obtaining financing, of course, if I'm selling a house, we all dream it's a cash buyer, right? I mean, that would be great. Wouldn't be good for my business, but in reality, most people do finance their homes. And because of this forbearance issue, right, which is an important thing to understand, the federal government is really trying to help Americans understand, look, if you're in a mega pinch right now, you're about to lose your job, or you have lost your job, you've had your income drop dramatically, there's a real problem there. And hopefully people understand that they can take advantage of this idea of forbearance, which is not forgiveness. That's one thing people should really understand.
Right.
Forbearance means a delay in your payments. And they haven't worked out all the details on what that means yet, really, but it allows people to take a break on making their mortgage payment for a matter of months, and they may extend it longer than that. That's great on the surface, and it's excellent for people who need it. Where it's a real challenge for the mortgage industry is there hasn't been any backstop put in place yet from the government to back up the servicers, right? So if I'm an investor in mortgages today, and I know there's a chance that I could loan you the money, and you just may not have to pay the next few months, the demand for an investor to want to invest in mortgage assets like that has just dropped dramatically. And so because of that, the credit criteria has gotten extraordinarily tighter, really tighter than it was, several years ago. So you're seeing credit scores, minimum credit scores, rise very quickly. So you could have a person putting in an offer on your home. You want to make sure they're rock solid, right? And they're not on the edge of one of these credit bands that could just change overnight. So a couple of things I would do. I would make sure my agent, of course, you got to have a great agent. That's you guys definitely. This is one of those times that An agent's value is just, I couldn't stress the importance of that enough, because we get to see the disasters when there's not agents involved. So
Right.
having your agent review that contract, I'd want to know, who is the lender, right? Do we know the company? Are they, reputationally, are they strong? Who is the loan officer? If it's somebody local, there's some really good loan officers. Of course, we know we do a great job, but there's other good lenders too. So just make sure somebody you trust. If they're obtaining jumbo or non-conforming financing, I would be really, really curious about, the lender, what type of loan, is it locked in, right? Because they could think they have a loan program that's squared away, and then tomorrow it's gone because of the issues I just talked about. So you really just want to make sure that you have a good feel for where they're getting their financing. Has it already been secured? And a couple of things you can do to protect yourself in the transaction: ask for a commitment letter, not just a pre-qualification letter, but see if they can provide within a reasonable number of days an actual letter, which is a commitment to lend. It's signed by an underwriter and an executive at the company. And we do those all the time for people who need them. And it basically says, look, we have the money to loan you. It'll be here on this date under these terms, as long as you provide A, B, C, and D. And those A, B, C, and D items should not be anything that should cause you, any kind of anxiety, right? They should already have the income calculated.
Sure.
You want to find out they have their cash to close verified, right? It's not because you want to pry and get personal details of the buyer. You want to just see that the lender has actually already checked out on those items. So, hopefully they're already pre-approved, and a way they get you a commitment letter pretty quickly.
That's awesome. Yeah, thanks for that, Nick. What's the best way, if folks want to reach out to you for more information, what's the best way that they can get in touch with you?
So first of all, I encourage you to check out our website at www.supremebest.com, which is a really unique site, and it's got a lot of great resources for people, not just on the financial side, but just where we want to meet people in their life, right? So we're not just about making money. We want people to be their best personally and professionally. So I would encourage them to check out our website. It has access to all of our loan officers. We've got a number of really, really talented professionals here in Atlanta. And they're also, able to pull up my email and anyone they can access in the company there. So I would encourage them to check that out.
Awesome. That's great, Nick. Well, thanks once again. Thanks for hanging out with us and offering some information. And we'll be in touch soon, man. Have a good one.
Yeah, thank you so much. Stay safe.